Let's talk about the dollar, because I think a lot of people have focused on that asset, on the currency. Um, a lot of people are asking from the perspective of other asset classes, also gold in particular, because that move generally happens in tandem. Has the dollar index, in your opinion, based on technical indicators, peaked out?
I would say again a tactical perspective, if you see this chart here, you can see that the index has been trending since the global financial crisis. That's that low in 2008. So we've got the sort of ascending channel, pretty well containing the price action since then, and we're at the top of that channel. So it makes sense that right here we would pause. If you look at the lower panel, that's just the 52-week rate of change, basically the momentum of the index over time, and you can see that it's definitely in this danger zone where you at minimum get some sort of a high. If it's not a major high, certainly a tactical high. So if we were to get a pause in here, that would not surprise me. But one of the things I would want to point out is that if you look at the long-term trends of the dollar versus most of the major crosses, I mean, it's actually in a bull market. So a lot of the pushback that you get from folks who look at the DXY index, which is what you were just looking at, is that the first thing they'll tell you is, well, that's mostly the euro. That's not really revealing what's happening to the dollar. But if you actually dig beneath the surface and you look at the trends across multiple major crosses relative to the dollar is in a major, as I alluded to earlier, fundamentally driven long-term monthly uptrend relative to almost every other cross. I think it's the only three crosses where the trend is not clearly up would be the Mexican peso, the Brazilian real, and the Russian ruble, of all things. So beyond that, it's in a very clear uptrend against all those other crosses. So if we do get some sort of a pullback, that's the difference between where the dollar is and where the U.S. market is. Those trends for the dollar are clearly up across most of the major crosses. So any weakness in here, I'd be very willing to buy weakness in the dollar. Whereas when you look beneath the surface of the S&P, most of those trends are down. And by most, I mean almost 3/4 of those major fundamentally driven trends are actually negative right now. That's what makes the current environment very different from any other pullback that we've seen since the global financial crisis. And I would even put the COVID sell-off, because that happened so quickly, and we responded so quickly off the lows that we actually didn't do the same kind of damage that we've actually done off of this high. So the underpinnings of the dollar strength is the breadth of that strength is quite strong. So any weakness that we did see off of that channel high, I'd be inclined to be a buyer of it.